Hello and welcome all of you to this another edition of Navigate with HSBC. This is our podcast series which talks about various different facets of investment and investment strategy. But this series is slightly different because our guest today is a lady who is not only an investment fund manager, but is also somebody associated with the insurance industry. So that's a very lethal combination, of course. Please join me in welcoming Jyoti Vaswani, Chief Investment Officer of Canara HSBC Life.
Thank you so much, Sharmal, for having me on your show.
So tell us a bit about the strategy that you're talking about. Tell us a bit about what kind of factors are you going to be using. All of that we've heard from you in the last 15 minutes. Tell us how it's coming to play for you.
Yeah. So we are starting with launching one fund. It's called the Nifty Multicap Momentum Quality 50 Index. This particular index is a subset of Nifty 500. 50 stocks will be selected from the Nifty 500. The parameters for selecting those 50 stocks will be, one will be momentum, which is, those companies which have done well over the last 6 to 12 months in terms of price performance. So that's momentum. So those companies which have done well, but we are also adding a quality component to it. We are adding a quality element to it by saying that we are looking at the financials of the company. The financial parameters have to be like low debt to equity, high return on equity, and a consistent 5-year profitability track record. So therefore, we are getting the trendsetters, but we are also having a quality into that so that in a downfall also, the quality parameters will stand out and will help the index to outperform. So we've chosen an index like that to start with, because I think this will be ideal for a customer like for insurance who is looking more for long-term investments, and it is ideal for those kind of customers.
So, Stuti, you're saying the fund that you are choosing to have on the investment side of the insurance product that you mentioned is going to have the advantage of a momentum portfolio, but with the extra, let's say, cover of quality. So within momentum, better quality stocks is what you really get invested into.
Absolutely.
And hence you get the momentum advantage and also the advantage of having a quality stock investment portfolio.
Very aptly put.
Very interesting. And I know you spoke about how factor investing really puts together both passive and active investing strategies together. Given that the way insurance runs is that there is a certain degree of certainty in how customers stay invested, etc. Does factor investing have a better chance of performing in that circumstance? What is your sense of that?
Absolutely, because as I said, in insurance, usually people don't come with a time horizon of 1 or 2 years. We have insurance cover which is provided over the life of the customer, and therefore, usually these are long-term investors who come and stay with us. And it is very, very ideal for these kind of customers because factor investing, while in the short term market volatility can cause some issues, but historical evidence has it that when you backtest these indices that we are talking about, in the long term, they have outperformed their underlying indices by a wide margin. So it pays for an insurance investor to actually invest in these kind of strategies because it takes care of stability as well as growth. So it's giving you a combination of both.
Very interesting. And for a insurance investor, in our case, for example, most of our customers stay invested a fairly long period of time. They purchase similar kind of a products. Of course, they've seen benefit of doing this. And what you tell us is that this strategy can really play a very significant role in their overall portfolio. Fantastic. I mean, that was really useful. I think I of course have as a run up to this conversation that we were having with you, we've also reached out to a few of our clients, a few of our relationship managers to understand what their views sort of have been. And coming couple of questions are really going to be around that. So please bear with me if I were to read through this. This one really is about the risk return profile. I think that's interesting. While we spoke about this, saying that equity, this will be more or less like equity, but given the multiple layers of filters that you put on this kind of an investment, do we expect this to be slightly better off from a risk point of view, especially given the return profile of these products?
Absolutely. I think, but it also depends on what kind of factor you're selecting. So, for example, the fund that we are introducing, we are trying to keep this in mind that we should be able to, the volatility should be lower. And that's why we are not having only a momentum fund. We are introducing a momentum quality fund.
Right.
So that there are some quality parameters to it. When you have stocks which have done well in terms of price, because they are fundamentally strong, then they fall less in a falling market. Vis-a-vis stocks which have just gone up in the momentum and their fundamentals were not so strong, they tend to fall more sharply when compared to quality stock.
Right.
So that's the element we are trying to build in to manage the volatility, and that's why we have chosen this index, which takes care of the volatility as well, because we are also catering to investors who are long term, and we want to manage the volatility to the extent we could.
Fascinating. Jyoti, I think we are broadly coming to the end of our conversation today, and our last thoughts basically from you on to our investors on factor investing specifically. What would be your message to them?
I think factor investing is the way to go. It is the smartest passive investing that you can do, and it is suitable for all kinds of investors. The only caveat is please do have a long-term investment horizon, because it is for investors who are comfortable investing in equity, who are comfortable with market volatility, and have a longer-term investment horizon. So if your objective is, say, goal or stability, this kind of funds will actually meet your goals, and it'll help you to create wealth for the future.
So as we come to the end of this conversation, Jyoti, if I were to ask you, what would your last words be to all our investors and all the audience watching this show?
I think factor investing is the way to go going forward, and it kind of it's a blend of active and passive investing. So it gives you the best of both worlds. It is something which is the future, and everyone should participate in this as well. Along with your active funds, you should start dabbling in these kind of funds. You will have stability with these funds and growth with the active funds. So I think we'll have having a combination of both these strategies is ideal for creation of wealth.
Super, Jyoti, thank you for a very engaging session. And I'm sure our investors have benefited from this conversation.
I do.
And looking forward to your fund doing very, very well.
Thank you. Thank you so much for your wishes.
To all our viewers, I think this has been again another fascinating session from Navigate with HSBC. Factor investing is going to be a very, very important strategy that we expect investors to follow from here on. When you speak to our RMs, please ensure that you ask for it. You'll definitely get to hear it from them as well. Make it part of your portfolio. It's going to be an important element to add value to your portfolio. And like we do every time, please look up to HSBC across the social media handles and obviously follow us at Navigate with HSBC for more interesting topics like this from here on. Thank you for watching us.